you today to kind of talk a little bit about, get to know you a little bit better, find out what things that you consider maybe struggling with trading, and then see what we can do to help you with those challenges that you might be facing. So tell me a little bit, Stephen, what do you do for a living, or what do you do for full-time work right
So now? I'm an electrician. I'm contracted at a major oil company in Mississippi, and this is something I'd like to do a little bit more of. But I'm having an issue when I'm in a trade when to exit a losing trade.
Sure. So trying to mitigate your losses.
Yes.
Why do you trade? What's the motivation to trade?
Well, the first thing that comes to mind is freedom.
Okay.
You're your boss. I love what I do. I love doing electrical work. I love making things work, but maybe not the hours that I'm putting in. I have to put in 50 plus hours to really make a living.
What is maybe something that you struggle with, or maybe is a challenge that you're trying to get better at, so that you feel like, hey, if I could get this piece down, I could be more consistent or a better trader? Is there anything like that you're like, hey, this is what I need to work on right now?
Well, yeah, there's two.
Okay.
One, when I get up 100 pips and I kind of put more into it.
Okay, so you're like, I'm up so I can risk a little more.
Yes.
Okay.
It's never paid off. But the other thing is when the trade goes wrong and I read it wrong, and when do I exit?
Sure.
It's kind of hard when you're down 15 or 18 pips and you gotta take that loss.
Sure.
Even if you were up 36 pips, 2 of those cancels out.
Yeah.
So I need to know when the trade goes south.
My personal belief is that if you have a systematic approach to your losses, just as you do your wins, it takes the emotion out of it, and you're like, oh, okay, well, that's a losing trade. That's okay. So for me, if I have a losing trade on, then I need to have 2 or 3 winning trades on, right?
Yes.
And so for me, I love breaking up my trades. So instead of just having one trade on that it has to ride, I break up that one trade into 4 or 5 positions, so that if one position is losing, I have 2 or 3 others that are winning. So it kind of helps to manage that trade. Does that make sense?
Yes. It's still easier to pull off the 1.5 pip versus the 12.5 pip.
Oh, for sure. Perfect. So your gold one.
Yes.
Pretty fun. So let's take a look at what you
I got gold 1 yesterday.
Oh, sweet.
Yes.
That's right. I remember you saying that. That's really good. What we really look at is like your last 30 days. Okay. So your average win is 41 cents. Your average loss is $2.05. Okay. Looks like you trade with a 0.4 lot size.
Well, normally I'm 0.01, maybe 2, but I felt a little bit more confidence. When you see a 4 in there, I'm more confident.
Okay. When there's a 4 in there, you're like, I feel like there's a good setup happening.
Yes, and I even had a couple 0.1. I don't know if they went my way.
Okay. Okay, so what I would suggest, and I don't know, do you ever use the risk calculator in LBO?
So yes, I do it, but not. I'm definitely using it more now being at boot camp.
Okay, good. So what you don't want to do is you don't want to take a loss that's greater than $2, and you need to take wins that are greater than 41 cents.
Okay.
So let's jump over to Alveo here. You can trade with 2 lots, right? That's your maximum lot size. So I would recommend never going over 50% of that. I'd recommend just kind of staying between 1%. You can if you see a good setup.
Okay.
And sticking at 50% so that you can give yourself cushion to fix bad trades.
Yes.
Right? And so if you're in it at a full 2 lot size and you get into a bad trade, you can't do anything. You're stuck. So by only trading 1 lot and always trading 1 lot, you give yourself enough cushion to either A, seize opportunities as they arise, or B, help you to get out of bad trades when that happens, right?
Yes.
And so a lot of times when I get into one position, I'm like, okay, now I'm in heavy, and I'm looking to get out of some trades so I can kind of manage that 50% trade ratio. Does that make sense?
Yes, definitely.
So
10 trades at 0.01.
So here again, we don't want to take a 2 You want a $2 loss, and so if you're trading at a 0.02, is that what you said you
Yes.
typically trade at?
Or yes, average.
Average?
Yes.
You would have to make,
So I can have 5 trades.
you would have to make 10 pips per trade in order to get your average, right? And so your losses, so basically you cannot lose more than 10 pips, right? Because
Yes.
that's your $2 average. You need to win more than that, so you can either do what? You can either trade at the 4 pip and go for 5 pips, or you can trade at 10 and go for 2.
So if I did the 0.04, then I could only have 3 trades at one time to stay at half. And it would
No,
be,
no, no, no. 0.4.
Yes.
No, 3 trades, but 0.04. You
Yeah,
can have a lot.
Oh, really?
Like it's 100.
Oh, okay.
It's 100, so it's 100 divided by 4.
Okay, sounds good.
Does that make sense?
Yes.
So one full lot size is basically 100.
Yes, one full lot.
Because you're talking about 0.01, 0.04.
Yes.
So you could trade. So what I'm saying is that in order to get your average losses, average wins and average losses up, I would say trade with a 0.10 on good stuff, right? But if you trade with a 0.10, then you go for 2 pips. Is it easier to get 2 pips or 10 pips?
It's easier to get 2 pips.
Yeah,
Okay.
it's easier to get 2 pips, right?
Yes, of
And
course.
so-
Especially, yes.
Yeah, and so what I'm saying on this account, let's just swing for 2 pips so we can get 2 pips now.
Perfect.
Now let's look at a trade setup, right? If you read this market, the 5 and the 1, what would be your bias right now? What direction do you think the market's kind of trending in?
It looks like it's going down, but I would play the upside of this right now
Why is that?
because it looks like it's bottoming out, finding a bottom right there, and it looks like it's going to.
Looks like you might see a turn,
Yes.
or it might continue on this.
In fact, there's a 3 bar.
Because on the 1 minute chart, you do have this uptrend, right?
Yes.
But on the 5 minute chart, you have this down channel, but we still haven't really hit that. It still could be in a down, but it still has a little bit of room to go up before it makes that decision if it wants to break this trend. Does that make sense?
Yes, but now we're looking for short and short
Yep.
and a 2 pip.
In a 2 pip range, which honestly is very easy to find right now because the volatility is really high. So if you were to place a trade,
That would have been 2 pips.
see right there.
Yes.
So if you were to place a trade on this, you're into a buy right here, right?
Yes.
Okay. So I would probably perfect right there. You see, that is the perfect place to put a take profit. Why is that?
Yeah, why is that?
Do you know why?
What are you looking at?
So I got 2 pips between where price is at and where my take profit is, and you see how my take profit is right underneath these bodies
Yes.
of this. Now this is a decision point in the market right here. Now it's not a very tough decision point, but it's a decision point nonetheless. It's going to come up to here and it's going to make a decision. Am I going to break through this ceiling or this floor and continue up, or am I going to bounce off of this? But the thing is, it's going to have to make a decision, and what we want to do is we want to put our take profits right before it makes that decision, right? So if you think about it, and let's say there's a bag of money, and the bag of money is sitting on top of the table, right?
Yes.
Is it easier to grab the bag of money on the top of the table, or if I put it below the table and you had to go through the table to get the bag of money?
On top.
Right. And so that's exactly why I put my take profits right here, is to put them on top. Now, you can continue to buy all the way down to here, right? Because this is, what is this right here?
The floor.
Right, so this is the floor. If it breaks through that floor and you're in buys, then what are you in?
Exit mode? Okay.
So you look at that. So I identify all the potential areas. So our bias is to buy. If it continues to run down all the way down to here, we are now in fix-it mode if it breaks through here, right? But my favorite trade is when we have 2 pips of profit right in here. And I'm going to stack a few on right there. So what we just did is, as it goes down, this trade right here that we put on right here is as it gets further away from it, the probability of it hitting gets reduced. Does that make sense?
Yes.
The further away from that take profit line that the market goes, the probability shrinks that you're going to hit that take profit line. Okay. So as it continues to shrink, we don't want to keep our take profit line there. We want to say, well, the probability is reduced, so where can we put our take profit line in an area where the probability is likely to hit? So you can adjust it, and you can move the take profit line, and we can move it down. However, I wouldn't move it down unless it starts trading into a leg lower, and that means crossing this leg.
Okay.
So you got a floor here, another one here, and then your major floor here. So anytime it crosses a floor, I'd say it's gone to another leg. So if it dips down right here, I'd still be buying right here. But if it crosses here, then we're in fix it mode, right? So we're in a good position on the majority of these trades. So I still hold on to these trades, but I would move these just right there. And again, why am I moving them right below the body?
Because you're still on top of the table.
Correct.
And two of those can offset the first one that we put in.
Yep. So even if this comes up to right here and you get out, you're basically at break even, but we just got two of those right there that will help cure that break even trade, where it's either break even or you're losing less than a pip. But that's okay if we feel like the market, if this probability to hit that has been reduced, right?
Yes.
So, and you just want to peel that off. So, is it a higher probability that we're going to hit this take profit and this take profit? Obviously it's a greater probability we're going to hit this one because it's closer to us.
Yes.
Right? But if the probability was the same, I would move one of these up to here. Does that make sense?
Yes.
But I think the probability, I still think that we're going to be hitting that, so that's why I'm not moving that. Right? But if it does dip down below this right here, I would probably say that this is a broken trade or a lost trade to us, meaning that the probability of it being a positive trade has just been reduced, that we need to probably take a look at getting out of that trade at a loss. Right? And so as you start to look at getting out of your trades at losses, you don't wait until you're 10, 15 pips away. You look at the chart and say, here's where I think this trade is going to be a loss, and this is where I need to start looking to get out of that trade. And so you always are looking at the market in ways of, where's my profit, where's my take losses, right? So what would you do here?
So the market, I'd cancel out.
What would you do right here? I'm going to help you out. I'm going to get into a few more buys.
You're buying.
I'm buying right here. Why am I buying right here?
Well, the sellers are selling the market. Okay.
Well, I just bought right there because I feel like you got a little bit of a balance right there, right?
Yes. I would have went the other way. I would have went on the downside.
This is a floor right here.
Yes.
It's testing this floor. Hasn't broken, so anytime it tests, we can make money on that test, right? So now we got a few wicks coming in where the wicks are forming on the bottom. What does that tell us?
If the wicks are forming on the bottom, it has an upward trend going to it.
Well, it tells us that there's pressure.
Okay.
Pressure being pushed in onto the top. And because of price cycle and time cycle, we're only looking for 2 pips. The likelihood of it hitting with this momentum, like each bar right now, is running about 2 pips. Right?
Yes.
And so getting in on the bottom part of a bar and it bouncing up to 2 pips is a high probability.
Yes.
Right?
So you have wicks on both sides. So you're saying that you have buyers on both sides in this market. You have a lot of people in the market.
Buyers and sellers, right? So I look at the wicks, but only as a body of the wicks. Like one wick doesn't really do anything. It's like, where are the majority of the wicks forming? And when you get a lot of wicks on the top or a lot of wicks on the bottom, that just tells you what are the buyers or the sellers pushing the market, right? And so that kind of helps to determine a bias. When you see a lot of wicks on the bottom, you know that there's pressure coming in to push that up, right? So if it pops up, so this isn't something that I do right here. Now this, I would consider maybe this is a losing trade, but I don't want to take a big loss on it. But I'm going to wipe it out anyway. So I'm going to take my take profit and I'm going to put it right here. So if I do get a little bit of a pop, it takes me out of that trade at a loss. But that loss is not a 10 pip loss. It's now a 2 pip or, well, let's look. It's now a 1.5 pip loss, right?
Not a problem.
Not a problem. But you're taking that loss as opposed to saying, well, it'll come back, right? No, you don't want to say it'll come back. You want to say, you want to say, well, the probability of it being profitable is reduced, so now I need to look at peeling that off so I can put it back on somewhere else. You following me so far?
Yes, I do. I'm watching that. So the last bar doesn't have a wick on the bottom,
right?
But you still got selling pressure. So
like I said,
I would have got in there.
My thing is it's rounding the corner right now, and it's probably going to come all the way back down to here.
Okay.
But as it does, it's going to give us that bounce, that movement, right? And so you could certainly buy all the way down because we don't think it's going to come straight down. The other thing that I do too is also you could get out of here on a stall. So if it comes up here and it stalls and it's close enough, I just take it out manually.
Yes.
Right? So here, because we're at the top of that candle, you can get into some sells, right?
Yes.
And again, a couple more, right? A couple more sells. If it pops up to here, we're going to just go ahead and close that one out. This is our worst loss right there. But we want to wait until we get just a little bit of a pop so that we don't take maximum loss. We reduce our loss, right? So I'm waiting for that little pop up, which we might have just had it. But I'm very it's not an emotional thing, it's a clinical thing. It's like, okay, we do it every single time. Right? If it goes up, great. If it goes down, great. So you're kind of in a position of you're going to win either way, right? Because you can get out of a trade if it goes up and you can get more on, or if it goes down, it hits your take profits. Do you see that?
Yes.
The other thing I'm going to do here is I'm going to put this just right at the body, right there. Positioning your trades is a great thing to do while you're just waiting for the market to make a decision. So it just shot up right there and got us out of that one trade. And it got us out of that one trade.
What? Oh, okay.
At that, right there.
Oh, it came in order, okay.
Right? Because, yeah, it goes in order.
And 1.7?
Yep, 1.7 on the loss, which isn't bad.
No.
So now, as it's shooting up, same thing with these trades. As it keeps climbing up, these trades now become less likely to hit, but again, I'm not really worried about that until it crosses this area, right? So I still think they're in good position until you see it cross this ceiling, and then even worse if it crosses that ceiling. Are you seeing that?
Yes, I would right now put a stop loss maybe at the top of this. That way, because we still have a downtrending market.
You do.
If you look at the overall. So I believe it could come down to.
The other thing that I do too is right here. You can do this a lot, where I'm going to go ahead and just pull that down. So I just pulled all of them down here.
Okay.
Ooh, I like that. Oops. I love those little pops if you can get on them. Because if we would have got on it right there, it would have already took us out of profit.
It's about to.
Right? So you know what I mean?
Yes. There you go.
You know, so you can like click on them really quick. You can get some really quick profit that way. You know, just those pops. So you're always looking for a pop, because usually when it pops, it kind of bounces back, right? And so we got a little bit of pressure coming in. It's testing this right here. It doesn't want to break that. I don't know, right? But again, price cycle is saying, you got 20 pips down, so it's probably going to go 15 to 20 pips up, which is probably right here before it comes back down again to another leg, right? Another cycle.
Dave, you did that really fast on the. How'd you merge all the take profits? Can you show me that again?
For sure. So I'm going to get into another one right here. Take one right there and another one. So you go right here, magneto profit.
Oh, okay, great.
And then you click all your sells or your buys, whichever one you want. Check all, continue. And then what you do is you click on an area where there's not a line.
Okay.
So if I have a ton of trades on, I'll probably click on somewhere down here and then adjust them because I can't really see where I want them. But my premium perfect position for these trades would probably be right here, right? Mm-hmm. For these trades, I'll keep them there. So I'm probably just going to get out of those ones right there. Hits the take profit. See that how it's stalling right there? Mm-hmm. Right on your take profit line? If I was me, I would just take those out manually because I don't want it to pull back like it just did. So anytime I see a stall, I'm getting out because I'm taking those profits, then I'm adding them back on and getting more profits, taking them off, getting them back on. Whether it's 1.8 or 2, it really doesn't matter. I'm still taking those profits.
So the magneto tool that you're going to use, if you set it right there, it would have pulled this one up to it, that line.
Correct.
So how would you have separated that and put that one back underneath?
Well, you'd have to know what order it is.
And you could come over here to see your sale.
So these orders right here.
188?
Right.
Oh, there's 2 in there?
So right there. If you want to adjust different. But I tend not to even worry about that. I tend to move them all.
Okay.
But I just felt like we wanted to leave those ones on, so I didn't do it. Because I wanted to double the profit. Okay, so we're in good shape if it crosses this bar. If it crosses this bar right here, we're probably going to come all the way back down and take these as profit. Right? So I'm waiting for that, but on that pop, we can make money while we're waiting for that to happen.
So what are you looking at when you see 2 top bars like that with no wicks to the top?
That sucked. That sucked.
What happened? I'm sorry.
I accidentally clicked on the chart and it put your take profits to a bad spot and it took them out for minimal, for nothing. For nothing on the game.
Give us a break.
So that was my fault.
That's all good.
But so we took a little bit of losses on some. We took a bad loss on that 8 because they fat fingered it, and we took like little tiny losses here. But taking these little tiny losses will actually help your averages too. Right? It'll pull your averages down by taking a ton of little tiny losses. Right?
Yeah, I actually use that technique to get out of
a hole.
Well, I was trying to get my averages up, so I just toggled the
so
take
the same
profit
thing
down.
here, right here. You see, we want our take profits to kind of rest on top of the table. Right, and so where we see a table, we want to rest on top of the table. We don't want the market to have to go through the table to get our profits.
So how do we identify the tables?
It's just support and resistance.
Okay.
Right? So you got a little bit of a support and resistance right here where that green line is, where our take profit line is, and then where's the next one down? You tell me.
Well, this is the bottom.
Okay, good.
And we have a top right here. And we have a mini top right there because it's not our highest high.
Right. So when you're working with only 2 pips,
yes,
the mini tops are important because if I was to get into a buy, I was just going to jump into one, then I would want to make it underneath that.
Mm-hmm. Okay.
Right?
Yes.
Underneath that mini top. But as it comes up here, I get into a sell right when it hits that because it's probably going to come back and take those profits. Just follow me?
Yes, I did.
So if it pops up into that area, we get into a sell, comes back down here, we might get into a buy. Right? And you can get buys and sells on at the same time. That's what's awesome about Apiary Fund. So you can hedge.
So but what we're calling the mini top, could I put a limit buy in there so when it goes there and I felt if it was going to punch that table, it would keep on going and I could put a buy and a sell?
Certainly could. With the wobble technique, you're in and out so fast that it's kind of hard to do that, right? And we're stacking trades on right and left. So
Put another cell on.
yeah.
Definitely get some resistance with the sellers.
So we're gonna pop. Those trades are all gonna pop right now. I think. Pretty sure. I mean, our spreads are
5 and 7.
Yeah, we gotta watch those spreads. So I'd probably do the same thing. If it crosses this right here, then it's gonna hit that. Right? So that's the way I look at trading. If it crosses this, it's more likely going to hit this. If it crosses this, it's probably not going to hit this, and so we need to start moving this up into areas of, okay, it's not going to hit 2 pips, maybe there, then we move it up, maybe there, then we continue to move it up, and if it keeps going higher, we keep moving it higher, but we never take it out.
There it goes.
If it crosses, but if a wick crosses, it's not as strong as if the body crosses.
There it goes. And it's right at the wick.
Oh, maybe, do we have an order on that doesn't have a take profit? Well, that's weird. I'm just going to get out of that. I think the take profit got moved.
Oh, okay.
Clear down there. So we'll just close out of that guy right there.
Okay.
For profit, right? Okay, so we've been trading for 13 minutes and we're already at 30% on the day.
Okay.
Right.
And so I think we went up about 30 pips right there, or 30 pips, yeah.
Where did we start? What do you remember? Where
I think I was at 30 pips.
30 pips.
Yes,
when
and
we
we're at
started?
76.
Do you know what your return was?
I really think, please do, because I don't think my return was that great.
Okay. So we still haven't hit that floor, so now I'm going to jump in. We still haven't hit that. It's going to. But I'd love to have my take profits. This is a better position for the take profits to be. So if it pops up a little higher, I'd like my take profits to be sitting right on top of that. Because it would have hit it already and took it out.
Those are gone.
Because my spreads are now point.
Okay.
So do you see that? How
Yes.
I'd rather have my take profits sit there, but I'm like, okay, well, so if it pops up just a little bit, like right there, let me get into a few trades here. So now we're into a few trades. And I'm going to take the magneto if I can on my cells, check all, continue, okay. And this is what I do. I put them all there so I can see. So sell, check all, continue, hit okay. And then I'm going to put them all right there. And these ones are getting 2, and these ones are getting a little bit more than 2. Right? If it just comes back down, and is the probability that is that a good play position for it?
Yes.
Why?
Because there was a little resistance. Why? Because we see a downtrend?
No, the take profits is the position of the take profits in a good position.
Oh yes, I'd rather get out of these trades and get 2 and 1 pips on these than have a lose.
Right, and well, the likelihood of us hitting that take profit is pretty high right now. Would you agree?
Very high. We probably just crossed it, but with the spread.
With the spread,
yes.
Right, and so we needed to come down.
We're sitting on the spread.
We're sitting on it, and so we could be greedy and say, okay, we need to cover that spread, or we could have just got out of all of them and take profit on them, right? Which I might do because it's
No.
I'll go ahead and take those.
Okay, I didn't even see what.
Right, all I did is just hit the red X.
There you go, but it's
But now it
somewhat
would have
stalled.
gone all of it.
Yes.
But it stalled, and so it could have bounced back up. And if it bounced back up, great, I would put more on. Right, and did the same thing again and again and again. Right, so like right here. But now I have them to put back on. So yeah, I took 1.8, 1.9.
It was
not
18.
a full 2.
I think we got 18
pips. Right. So I'm doing it again. But I've already put those in the bank. right?
Yes.
And so you're looking forward, not backwards, all the time, right? We do have a couple wicks coming in here, so the chance of it coming up to here is good, but I'm still selling. If it breaks here, I'm buying, you know. If it breaks this, then I'm in fix-it mode if I get in trades right here.
So 102 pips.
So 102 pips, just like that, right?
0.4.
But I'm trading a little bit.
You're halfway
higher.
to your goal.
I wouldn't be trading I'm trading a little bit higher just to help you out on your averages, right?
Yes.
Right.
Okay.
So normally I trade with a 0.02, and but I get into more trades at 0.02. So I get into a bunch of trades. So right here, you see, we're sitting on that floor right there. So it would be a good time to change my position for a little bit of a pullback on that buy. Now, I'm going to go in light, but we just got them. I was going to go in light because I don't know if it continues and hits that or if we're going to see that little bit of a bounce. But this is a decision point in the market. And so by having your candle, you get in when the decision points are. And you see those bounces.
Yes. Oh, yeah, definitely. I'm trying to see if it's trying to form a different pattern here.
So now we got a little bit of a break on this. So if the body were to close on this break, if the body closes here, then it's more likely going to go all the way down to here. So I'd still probably be into sells until it crosses this way.
Okay.
Are you feeling me?
Yes, definitely. It almost seems like it's going to peak one more time and just drop off.
And it could. But if it does, great. Right? We just take advantage of that. If it goes against us at this point, we want it to, because now we're getting ourselves into a better position. So again, I just kind of put my take profits here just to kind of clean them up, and I do it one more time, and now I get into, now I'm kind of going to come see where's the best spot to put my take profits. Right here, I'm going to say my best spot to put my take profits is right
on top
there,
of the table.
Right? On top of the table. So I'm going to do that, put it right there, because the likelihood of this coming and traveling down, you know, it's 3.5 pips instead of the 2 pips. But whether it's 2 pips, which puts us right here, or 3 pips, which puts us there, the probability is the same, so why not go for 3 pips?
Buy an opportunity.
Do you know what I mean?
Yes.
So, okay, so this is a good move too, because this is a great move right here, because we just got, it bounced. I needed to break this to get these. I needed to break this to get these. And that's what I look at. If it breaks higher, we just got to do it all over again.
So we're having wicks to the top side. So what is that telling you? That it has downward push?
Yeah, but 2 or 3 wicks don't tell me anything. It's a culmination of a lot of wicks. So I look back. There's a down. There's a down.
All right, we need to break that one.
There's a down. There's a down. So we do. So like I'm saying, we should. And then plus with the price cycle, we should see a down spot, right? So it's got to cross this before I feel comfortable about these. So with the volatility in the market, these trades are getting away from us, which I don't like. But that's okay, because we just need one good move and I'm just going to get out. Because I think around the 2 o'clock hour or the banker's close, we should see it do what we want it to do, because you can see we've had a kind of a marching market here where it just continues to go, where it hasn't really adhered to the price cycle, but it will. We're overextended, right? So I'm feeling like we've been overextended, so should market the probability is that it comes back down before it goes back up. There we go. Finally, getting some movement down. Now, right here, it's a testing area, right? So we're hoping that it breaks.
On the bottom of those bars where it's kind of is at the bottom of the bars, not the wicks, correct? Mm-hmm. So we're past it.
And this guy right here.
Okay, so if we can
get that.
So you moved them all the way down.
I moved them all the way down just because I wanted to give us a chance to hit the 0, and I'm not really sure where that is, and I don't want to be taking a loss if it's like here or here. So I'm looking at this to get to 0.
Bankers close, we're going to see maybe people putting the U.S. dollar back into the market, making the dollar stronger.
Yeah, typical.
So we're going to see a down trend in this next hour.
Maybe. It's so hard, this market right now.
Well, it works on the 4-hour chart. You just have
Yeah, so there we go. If we could get another pop,
look at the downtrend.
I'm going to take this off. I'm going to peel that off, peel these off. It's like I said, these are better to get out right
We're
now.
positive right now.
Right.
This one isn't quite above
So,
50. Notice where it is. See, it's all didn't make it.
see that big move? That's the move I've been waiting for this whole time. And
Peel a
I'm
couple
gonna
more
go
off.
ahead- I'm just going to go ahead and close them all out right there. So now we're still positive. We were up, I think we were up to 50 at one point. So now we can trade again. And we have a lot more breathing room. Do you know what I mean?
Yes.
And now we just saw that abnormal candle, right?
Mm-hmm.
So I love that abnormal candle.
That actually was.
So I'm going to load back up. Because remember, I love having my take profits underneath the table or whatever, or the ceiling,
And 50% of the candle.
and
on that
50% of the candle. So that is a really good position to be in right there.
But then after this, I'm still thinking with that much downward momentum going into this last hour of the day, we still have a down trend.
Right. But I think we're going to pop up and we'll hit these take profits.
So do your 0.02, go for 3 pips, and do that.
Again, there's that stall.
0.01 for.
And so on the stall, I'll go ahead and take them out.
You don't have to.
So
Okay.
you saw it. We now we're back up to where we were, but now we're like trading again, right? We got stuck. We didn't panic. Didn't take a huge loss.
Way to go on that.
Do you know what I mean? So we got out of that, and that happens all
Yes.
the time. You're gonna get stuck. So how do you get out of it?
Okay.
right? And then
Exactly.
and now we're back to we can breathe the sigh of relief, and we're back to trading again, right? So I got out on that stall, and it was a good thing I did.
Perfect.
Right? So I would have got back into a sell right there because it stalled, right? So I know it's going to come back down the other way. So if I see another bounce down to here, I'd probably do the same thing, right? Get into a buy.
Scalping.
But it hasn't bounced strong enough yet.
That's the one that.
So we're waiting on that bounce.
Adrian, that's just how I.
Let's see. Nope, not enough room. So what I would have liked is I'd like my take profit to be under there.
Time frames I use.
So if we get a down
Over and over again.
right there,
Then if the.
do you see that?
Trending market, 4 hour, 1 hour, 50. And the 15 minute.
And this is perfect. So this is where Magneto comes into play. Perfect right here. Check all. We're in the buys, not sells. Check all. Continue. Okay.
Double the target.
Cleared my room.
So doubling the target on the 15 minute chart.
Buy.
So it goes
Check all. Continue. Okay. And I'm going to put them all right there. See that? So this guy,
Hey, you can still trade.
not going to win a whole lot on. This guy, I'm just going to more than make up for that. Right? And we're in the money. Positive pips right now.
So we can close out.
You can close out if you wanted to.
We're not now. It's fast.
You see that around the 2 o'clock time frame? Get a little bit more of a volatility pop.
Yeah, okay.
Like I was saying, I think it's going to pull back at around the 2 o'clock.
It tells you if you're downrange too far. If you want to get on a different trend, you have to station up, down.
Put another one on, capture these.
Long-term trading is better when you're monthly and the market's not so tough. I had it by the guy, but let's see.
The other thing I never say is I coulda, shoulda. Never say coulda, shoulda, because if we had held on to all of those, it would have been a lot of profit for us. But you never look in the rearview mirror, you always look forward, right? So here's
Yes.
another opportunity for us. I would rather have played it safe, take the losses, played it safe. Now we're fresh trading in, then saying, oh, is it going to come all the way back down? I don't know. The way that this market was right here, the volatility was so small that I would just imagine that we would have had to continue on with that tiny volatility, right? Again, right here, sell, buy, check all, continue, hit OK. I'm going to put them all right there. I'm going to take a loss on that one, but profit on all the other ones. And again, I'm looking for that stall. And if it breaks it, we're good. I think we're good. Yeah, we're good. I think our 0.75. Right?
0.75.
I think we'll call it there.
Yeah.
Right now.
Yes, please.
Yeah. But we could continue with, it's like basically wash, rinse, repeat. Wash, rinse, repeat. You know, I don't like getting stuck. I don't like getting, but you see what, right in this area, I mean, right this area, do this for the camera. Right in this area, it was boring. We were stuck in some bad trades, but we felt like, you know what, eventually, because of this marching market right there, we knew it was going to eventually pull back. I honestly thought it would stop into this range, but it decided to continue on and pull all the way back, do 100% retracement. Look at that, it's probably going to, now it's going to retrace all the way back up, right?
Yes.
So, what are some takeaways? What I would do here is,
Don't get too overconfident. That kills me.
I'm going to do this for you.
Yeah.
So at the top of the calculator, the percentage, that's not a mechanical thing, that's just from the top one.
Really something fun I can do right now. But it's the same.
So it dropped it down, right? So we were above 3, and your average winner when we started was like at below $1. So let's see the last 100 trades. Not bad.
Okay.
Right, here's probably what we just did right there.
Go ahead and cancel them all out.
Crap.
Cancel them out. There you go. Do it. Thank you.
Yeah, 1% on the day.
Thank you.
So, Steve, so we just went through this. What are your takeaways? What are your thoughts about what we just did?
Don't get overextended. Take the loss. Know when to take the loss. Have a plan either way.
Did that help you?
Yes. Yeah, definitely did.
To kind of identify when you're going to take those losses?
Yes.
Okay, good.
And probably give me more confidence to do it.
Okay.
And so what a takeaway is no matter what the market does, have a plan.
Right.
If it goes up, know when to exit, and if it goes down, know when to sell.
Yeah, exactly.
So with the Magneto tool.
That Magneto tool is awesome.
Yeah, definitely.
For sure.
It's the first time I've used it, so.
Okay. Well, do you have any questions before we wrap up?
No, you've answered all my questions along the way. So, and there are questions that when you're trading by yourself, you go, what does this do? And so thank you.